All right, my next guest sees strong capital raising trends for hedge funds this year. Don Steinbrugge is the chairman of Agecroft Partners, a global consulting firm that advises investors and hedge funds. Don, by the way, was also a founding principal of Andor Capital Management. When he left the firm, it was ranked as the second largest hedge fund firm in the world. Good to have you, Don. Nice to see you again.
Good to be here.
Great to have you here in the studio live. Let's talk about some of the trends that have affected hedge funds over the last few years. Just give us a little recap since the financial downturn.
You know, it's been a very difficult environment for small and mid-sized hedge funds. You know, even though hedge funds are near their all-time peak, most mid and small hedge funds are, you know, on average probably 25% below their peak in assets. So most money's been going to the largest hedge funds as defined as, you know, $5 billion or above. You
know, I have to wonder, though, I see a lot of headlines related to junk debt spreads trading at their tightest levels ever, leverage loan finance deals trading even tighter than junk debt levels, which leads me to believe that there is a real search for return in any asset class. So does that factor into sort of your forecast for 2011? Which is pretty bullish in terms of asset flows into hedge funds?
Well, I'm excited about flows into hedge funds for a couple reasons. One is I think pension funds are going to continue to put a lot more money in hedge funds. You know, they're all trying to improve the funding ratio of their portfolios. In addition to that, endowments and foundations that have been on the sidelines the past 2 years because of liquidity issues are beginning to allocate to hedge funds. And also fund-to-funds. Fund-to-fund industry was devastated at the end of 2008, and I think they're going to be allocating. So that's part of it. In addition to that, I also think when you look at the returns you can get from long-only investments, you know, hedge funds look very attractive.
Very quickly, which particular hedge fund strategy do you like best? When I looked at the top three performers, at least so far this year, and that's a pretty short period of time, it looked like most of them were fixed income related. I think I saw mortgage arbitrage there. You know, distressed debt was another sector that was doing well in terms of arbitrage. But which ones do you think will do very well in terms of performance over the year?
Well, again, it's very early to tell right now. Fixed income hedge funds did pretty well last year, and usually you don't continue to do well year after year. There tends to be a reversion to the mean. I'm pretty bullish on long-short equity strategies. Last year was very difficult for them. There was high correlation in the movement of stocks, which makes it difficult to generate returns when you're going long and short. I think as those decouple, you'll see a lot more alpha from long-short equity. I'm also fairly bullish on CTAs and global macro. I think we're going to see a lot of money going in there.
CTAs being commodity trading accounts.
That's correct. And there's a lot of demand from pension funds for CTAs and global macro because they are not correlated with traditional long-only benchmarks.
Yeah, they're typically a good way to diversify a portfolio, and commodities have been quite volatile, which is usually a good thing for the hedge funds. All right, thanks so much, Don. I wish we had more time with you, but we'll have to have you back again.